What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Friday, May 17th. All right, guys, Nvidia stock here today down $2.71 per share. That's minus 0.29% in regular trading hours, down a little bit more here in the after hours. Listen, take that with a grain of salt. Volume's going to be very low, but let's take a look at this thing and pull out as much as the market, or the stock more so, was willing to give us here today so we can get the best understanding possible heading into tomorrow. Now, to do that, we're going to take a look at a few things, but let's start here on the 5-minute with our daily volume profile analysis. This is looking under the hood and pulling out directional bias that kind of lies beneath the underlying move. Listen, guys, hey, by the way, if you haven't done so already, or if you're new here, if you are, welcome, please subscribe to the channel. My goal here is 10,000 subs, and we're starting to get kind of close here. Nvidia is a daily upload. I cover this stock every day, so I appreciate you subscribing, and I will keep the Nvidia videos coming daily. Now, listen, let's take a look here. Let's pull up the volume and see if there's anything that we can pull out. Very normal open. Volume fades off the open. The green volume held on a little bit, but not quite enough to feel comfortable, at least me to feel comfortable, assigning bias. This pop here, we get a few of those throughout the day. These, guys, there's too much of a risk. If we were to start assigning bias on every outlier candle, we'd be here all day and we would learn almost nothing. So it's necessary when we're going to do this for actual real information to be a bit more picky than that. Okay, so like someone could argue here that, hey, there's a little bit of bullish bias. Listen, it's not enough for me to, again, feel comfortable. And then moving into the close, we start to see, honestly, kind of a slow close as far as volume. This big green bar, that's a rebalancing bar. That's triggered by algorithms immediately after the closing bell, so I ignore that one as well. So, you know, when you're looking at this, that doesn't mean nothing when we're unable to pull out bias. The way that I look at this is, okay, it's a small red day. If I'm a bear, I would hope to see at least moderate bearish bias in the underlying volume. And if I'm a bull, what I don't want to see is bias that matches the move. In this case, moderate bearish bias. But if we're seeing no bias at all, really, bears, perhaps a little bit disappointing. Okay, bulls, you know, that's not bad. But the underlying move itself is relatively small today. So let's move on. Let's take a look at the psychological self-fulfilling prophecy levels and really try to pull out something a little bit more definitive here from the market. These are the levels on the 30-minute, the 4-hour, and the daily. I'm only using what has the most eyeballs, right? It didn't take much, but I designed these charts on purpose to be very simple because I only want what the biggest sample size of people and algorithms are going to be looking at and making decisions around. So let's look at that. So here on the 30-minute, you guys remember yesterday's video, we were talking about how Nvidia was in a pretty great situation, right? It was pulling away, yanking the 50 period higher and bringing the 200 period up a little bit with it. It's not a bad situation to be in if you're a bull. Well, today we came in and we tested the 50 period. We barely gave it up into the close. Listen, it looks more dramatic because in the after hours, the stock's down a little bit and the 50 period continues upside, of course. But as of the close, which is really what I'm mostly worried about, it's barely given it up. Not nearly definitive enough for me to say that that's broken yet. So tomorrow, what I'm really looking at from a bearish perspective, bears, any retest to that 50 period, you're going to want to start to confirm that as short-term resistance. How do we do that? We reject off the level on high volume, whereas bulls, time to reclaim that, you know, or more so just claim yet again that 50 period as support. Again, we haven't really truthfully given it up because no one really owns that 50 period here on the 30-minute, at least as of today's close. Bulls, get back above that 50 period, bounce off of it on high volume. The higher the volume, the more definitive the confirmation of support that becomes. All right, whereas bears, any rejection off that 50 period could help to set you guys up for a near-term downside test. of that 200 period, but understand it's about a 3.5% move away. So not tremendous, but not a 1% move. Now let's move on. Let's take a look at the 4 hour. You guys can see here that on the 4 hour, we're looking at about a 3.4% downside move to really test that 50 period. So the 4 hour here is not top of mind, at least for me, but if the stock pulls in down into the low 9s, this is all of a sudden going to become very in play. All I'm paying attention to on it right now, unless it comes back into play here tomorrow, is bulls, that 50 period, the white line. You can see that that's getting yanked up these last couple of days. That's good. It has crossed over $900 a share. That's great that it claimed that $100 psychological level, right? But every $10 increment is a small sigh of relief that thing can reclaim. Why? Because each moving average, remember, these charts are, I feel weird saying designed because they take 2 seconds to set up, but they are well thought out to be as simple as possible with as many people and institutions and algorithms, whatever, watching as possible. So each moving average on its own is a relatively large psychological area of potential interest. So when that 50 period reclaims 9 and 910 and maybe 920 and maybe 930, well, all of a sudden you have a higher area of stocks currently above it, right, of potential support. That's a good thing. Doesn't mean it's certainly going to hold, but it's an additional potential hang-up. I like hang-ups. Back to the downside if I'm a bull. Okay, so that's really what I'm paying attention to on the 4 hour. Now, the most important chart of all is always going to be the daily. All right, now you guys know on Nvidia lately, we've been talking a lot about how between $900 all-time highs / $1,000 a share, there's not a lot going on except for the potential smaller psychological region of 950, which is actually what kind of hung us up today. So listen, bulls. Worst case scenario, big downside test of $900 a share. I do not want to give up 9. All that would do is potentially delay things for a little bit. Goal, break through 950, use 950 to push up toward all-time highs, if not $1,000 a share. That would be wonderful. But, a more reasonable, like 1 standard deviation expected move, which we'll look at here in a second, breaking above 950 would be great. That'd be a great way to see Nvidia head into the weekend. Bears. Small goal, reject off 950. Big goal, get below 9, start pressing toward that 50-day. Okay, implied volatility. Let's take a look. Very, very important for you options traders. Currently in the, I would say, mid to high range compared to the last 3 months. Compared to the last 1 month, it's in the higher range. Especially like month and a half, it's in the higher range. So understand that if you're buying options right now, you're paying a little bit of extra Vega value up front. Okay, so if IV starts to fall, you'll likely have to outrun not only that, but also theta with the delta move, meaning the actual move in stock price. Expected move. Okay, this Thursdays are easy. I like Thursdays because with weekly expirations, we don't have to give ourselves a headache trying to do math and guesswork. The market just takes care of it for us today because the expiration is tomorrow. So by May 17th, tomorrow's close, compared to today's close, the expected move is plus or minus $17.24 per share. That's the volatility expectation, okay? So understand that if you're trading options tomorrow, that's the market's volatility expectation. So we just did the full analysis. We'll take a look at directional bias here in a second by looking at volume. But the easiest way to have the most powerful options position you can possibly take, legally, of course, I should throw that in there with the way that politicians trade lately, is to wait until you have a very strong directional bias, and then ideally directly up against the stock in the opposite direction of your directional bias, there's as many psychological and technical hangups as possible, okay, to help hold the stock up or down, given the stock goes the wrong way against you. But that's not it. Directional bias isn't enough for options. Ideally, you also have a very strong opinion on volatility. And ideally, it doesn't match the markets. Okay, so if your volatility expectation is way over the market's volatility expectation, then maybe you're someone who looks to buy options with your directional bias. If you're someone who's like, well, I have a strong directional bias, but my volatility bias is way under the markets, maybe you sell to open some contracts to take your directional position, but also be quote unquote short volatility. That's how you can build out increasingly good options positions. And then you can launch into spreads and all those things. It opens up a whole new world of taking positions that, you know, isn't really necessary with stock and isn't ideal, I'll say. Or I should say improves very much so on simply buying calls or buying puts. Because there's a lot of times, like 50%, buying calls or buying puts is an inferior position because you might be on the wrong side of volatility just to get access to that directional bet. I mean, why do that, right? When there's spreads and things that you can utilize to better position yourself with the same bias, but just tweak things to give yourself that much more of a potential edge if you end up being correct in your opinions. All right, now directional bias, you're like, bro, shut up, directional bias. Going up or down? Well, the market's opinion is this. We have 1.23 million total contracts traded, 753,000 calls, 478,000 puts. Okay, so this isn't the craziest bias we've seen, but there's a slight call side bias, a little bit more than slight, I would say, on the overall call put ratio. But interestingly, if we break that down by the short-term speculators, the 0 to 20 delta range, we have it fades, that the aggressiveness of that bias, it fades. We have 274,000 calls in that range and 266,000 puts. So it's very even with just barely a slight call side bias out of the short-term speculators. But that bias gets quite a bit more, or quite a bit heavier when you look at the overall, which tells us that the mid to long-term bets, like the 41 all the way to 100 delta range, you can see those are much heavier call side bias. Again, the more mid to long-term perspective bets today. Listen, guys, I hope that helps. If you're getting value out of these daily NVIDIA uploads, leave a like on the video. I greatly appreciate it. It helps out tremendously. It's literally the best thing you can do for the channel. And it's free, and it takes like half a second. So listen, I greatly appreciate it, and then get out of here and enjoy your day. I'll see you in the next one.